Hey you guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another Wealthy Wednesday. Today we're going to talk about what in the heck are BitBonds. But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you to increase your financial literacy to help set you and your family on that path to financial freedom. So let's go ahead and dig right in. All right, so the inspiration for today's talk about BitBonds came from Anthony Pompliano. Huge thank you goes out to Pomp for his inspiration. He's at A Pompliano on X, and this actually came from his newsletter. It is a paid newsletter, so that's why I'm not sharing the entire thing, but I'm just sharing this first clip that introduced this concept of BitBonds. And in there, he said to investors, this was came out yesterday, there's been a lot of talk about Bitcoin coming to the bond market in the last few weeks. We've seen Strategy and other Bitcoin treasury companies use unique structures to get capital leveraging in anything from convertible debt to structured notes. But the more interesting area is the area of a BitBond, okay? So if you're not already subscribed to this newsletter of Anthony Pompliano's, I get nothing if you subscribe to it. What I get from it every single, multiple days a week is I learn. It's part of my education. Pomp's been a huge part of my education over the last 4 to 5 years in this space. He's consistently on some of the major news channels like CNBC and channels like that go and he shares a lot around the cryptocurrency space, in particular Bitcoin space. He's very influential in that area of kind of merging TradFi over here with these crypto and Bitcoin markets over here. So it's kind of a great guy to follow. I've learned a lot from him, and again, may or may not want to check out his newsletter. So in there, this is the big picture. This is what the BitBond looks like. This image is courtesy of the Bitcoin Policy Institute, of which I got a chance to meet Matthew Pine in person out at the Bitcoin Vegas event. Pretty cool. He's one of the head guys in the Bitcoin Policy Institute. I don't know if it's considered founder or what his exact role is. I forget what the title is, but super good guy. And so this is what a BitBond looks like. So the U.S. needs to refinance approximately $10 trillion of bonds over the next year, right? Over 2025. $10 trillion is going to need to be refinanced. What does that mean? It means these bonds are coming due. They're coming to maturity. And rather than issuing new ones at what the current rate is, the current rate for a 10-year bond is 4.3, 4.4%, somewhere thereabouts. Don't quote me. That's what it is right now as of the time of this recording. It may be different at the time you watch it. So if $10 trillion needs to be refinanced at a 4.5% coupon, that's going to cost the government a fortune. A lot of those are at 0%, 0.5%, 1% interest that are currently maturing because they were issued during a time of zero interest rates, 0% interest rates, right? We had that, what do they call it, ZIRP, zero interest rate plan or something like that. They called it ZIRP. But those bonds are coming to maturity, and there's no way they can roll a 0% coupon into a new 0% coupon. Those are going to go from a 0% into a 4.5%. Instead, what was hypothesized here by the Bitcoin Policy Institute is, why not take 20% of those needs, so 20% of $10 trillion is $2 trillion, and meet those needs through the form of a BitBond. Now, what is a BitBond, you ask? Okay, great question. So on a per bond basis right there, you'll note that it's $100 is what it's issued for. So you pay $100 for this bond. $10 of the $100 of the bond goes towards buying Bitcoin, okay? $10 buys Bitcoin. So what does this do? It satisfies the needs for government activities while adding some Bitcoin to the strategic Bitcoin reserve. So the other $90 is going to go fund the government for their immediate needs. And the $10 is going to get locked away into Bitcoin to help fund the strategic Bitcoin reserve. And I'll go into a little bit more depth in the next slide. Now, the interest rate on this is paid out at 1% annually for 10 years. So you say, why would I only get 1%? when I could turn around and get 4.5% for a traditional 10-year U.S. Treasury bond? Well, here's the kicker. Yes, it's only 1%. So over the course of 10 years, if we're not compounding that, you're going to get $10 back over the next 10 years, right? So you give them $100 and you get $1, 10 years in a row for a total of $10. It is a much lower interest rate, but the principal repayment is guaranteed by the U.S. government, independent of what happens to Bitcoin. Bitcoin's price could tank. Bitcoin's price could go through the roof. And you remember from a previous episode where we talked about the power of Bitcoin compared to fiat. Fiat is debasing and going down. Bitcoin's value is going up. It's a much better store of value, in my opinion. Of course, all this is my opinion, right? Now, total return, the total return on this BitBond, this is where it gets really interesting. And this is where the Bitcoin comes into play. 4.5% senior, 50% Bitcoin upside. Senior means that you get paid out first. That's what senior means. It's senior to any other claims. So upon maturity of this bond, 10 years from now, investors receive 100% of the Bitcoin upside up to 4.5% of the total compounded return. Now, when you take 4.5% per year and compound it for 10 years in a row, that amounts to $155.30. So that's a lot better for you than just getting a 4.5% return for the next 10 years. You get the 1% per year guaranteed, plus the 4.5% compounded return on top of it, and 50% of any remaining Bitcoin upside, right? So the government, what do they get out of it? They retain 50% of those Bitcoin gains, and that is used to build the strategic Bitcoin reserve at no cost to the U.S. government. So let's kind of go into this a little bit more over here. So what's similar? BitBonds are like regular bonds in the sense that the Treasury would allocate 90% of the bond to fund the government. It's only the other 10% that we're talking about, not the 90. The 90 is the same regardless of what kind of bond you're talking about. The remaining 10% of the funds buys Bitcoin. At maturity, investors receive 100% of the Bitcoin upside up to 4.5% of the total compounded return like we talked about. After this benchmark's received, investors would receive 50% of any remaining Bitcoin upside. And if this thing keeps going up at in the video that we showed before, it was going up at a 64.5% compound annual growth rate, may not keep that up for the next 10 years, but let's say that drops and is only 20 to 25% compound annual growth rate. Guys, this extra kicker on top, that 50% is going to be huge. And the coolest part about it is the other 50% is funding a strategic Bitcoin reserve for our country so that our country can start stockpiling Bitcoin and start reducing the debt. It's a way to fund the government operations, return a nice, solid, safe return to the investors, and at the same time, reduce the debt, right? It's a powerful tool to reduce the debt. So kind of the next level of thinking is think of Bitcoin as the new capital structure, right? We're moving away from a fiat or industrialized economy towards one that is digital, a digital economy that's technology driven, right? That comes from Jordy Visser. He was also interviewed by Pompliano pretty recently, and that was his paraphrased quote out of there. That's why I didn't put it in quotes. I took what he said in about a 1.5 to 2 minute interview and pulled it back down into that singular quote, right? So we're moving from this into this new capital structure from a fiat currency. We talked about that in a previous episode, industrialized economy, to one that is technology driven and it's digital, no longer fiat, but digital or cryptocurrency. So companies are starting to pave the way. They're attaching enormous amounts of capital to Bitcoin. All these Bitcoin treasuries that you see coming out left, right, front, and center, they're attaching their capital, this fiat, this melting fiat that's just sitting there on their balance sheet. They're rolling that into Bitcoin. They're attaching it to Bitcoin. So here's the question. Why shouldn't governments be doing it? Right? If the companies are doing it, why shouldn't the governments be doing it? And that's what these new BitBonds would do. It helps to meet the capital demand in the markets. The markets aren't looking for regular bonds, treasuries, IPOs of new companies that have to jump through all these bells and whistles and hoops to get regulatory hurdles to get to where a point of profitability and then repeat that year after year after year. No, the new hurdle rate is the compound annual growth rate of Bitcoin at the end of the day. And that compound annual growth rate over the last 10 years has been around 64%, if I remember correctly. And again, it might be as low as 50, it might be as high as 100, but it's definitely over 50% compound annual growth rate for the last 10 years. Now, many will say that's going to slow as Bitcoin matures and becomes a much larger asset. Cool. What if it gets cut in half from 50 down to 25? At 25% compound annual growth rate for the next 10 years? Are you kidding me? That's huge. The numbers are astronomical. So in this particular case with these BitBonds, the investor is benefiting. They're not just getting a regular 4.5% coupon on their bond. Instead, they're getting a 4.5% compounded of the first portion of the Bitcoin gains. And then anything above that, they're getting half. The government's getting half. It's helping to fund the government. It's helping to develop a strategic Bitcoin reserve for the government. It's funding governmental operations on a daily basis. Think perhaps lower taxes, less tariffs, all of those things. And that last part, that's me. That's what I envision could happen as a result of this, because they wouldn't have to be as reliant on those things to fund the operations moving forward. So, and the why behind it all, simple. This is the same slide that I used in a previous. I didn't even change it at all. Fiat continues to debase. Why is that? Because of money printing and inflation. New money is not literally printed in a sense that there's dollar bills, but is created. New money is created into the system, which basically dilutes the existing money that's in the system and lowers the value of everything that's already existing. If you had 20 million of something out there and you add another 10 million, well, you've cut everything's value by, in that case, 30%, because you added 30%, 33% more money to the system. You had 20, you added another 10, now you have 30. You have basically added another 1/3 to the system, so everything that's there is worth 1/3 as much. And then you add inflation in there too, price inflation that's going on, and asset inflation, while wage inflation is negligible. Wages are barely going up, but prices and assets continue to go up astronomically. So, and that's only going to accelerate. That's on the fiat. That's the old system. The new system is you've got Bitcoin that's on a fixed release schedule. That's called the halving. Every 4 years, there's a new halving. Right now, it's 3.125 Bitcoin every 10 minutes that are mined or are released into the system. And there will only ever be 21 million. And the last 1 million coins are going to take over 100 years to be mined. We already have about almost 20 million out there, just shy of 20 million that are already out there in existence, and the remaining 1 million are going to take over 100 years to be released. What's happening is capital is flowing from that old system of fiat over to that new system of Bitcoin, from a system of abundance to a system of scarcity. If you have something that's insanely abundant, it's not worth very much. If you have something that is insanely scarce, it's valuable. Capital's flowing from weaker money over to hard money at the end of the day. Guys, I hope that you found value in this today. If you did, be sure to give it a like. Make sure you comment below. What'd you like best? What would you like to see more of? What did you learn today, and what questions might you still have? Make sure you're subscribed to this channel so you don't miss any more videos like this. And remember, guys, you can book a course to learn TradingView, technical analysis, how to understand options, right? Those are all available at my website at gdinerocoaching.com. You can also book individual appointments with me there. Over 600 people already have, and that number just keeps growing as people are increasing their financial literacy. And remember, My name is G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom at the end of the day. Thanks for tuning in, and we'll see you next time.